Fighting the pandemic could become a battle against debt. Lockdowns have halted the flow of cash to workers and companies, forcing governments to step in.
We need to provide more immediate relief for working families and businesses now.
Countries, rich and poor, are burning through vast amounts of money, but it's all on loan. They're taking on debt like never before and could be setting a dangerous precedent. It'll leave younger generations to foot the bill, and their financial futures already look bleak.
Economists argue we'll have to dig deep to get out of this crisis. But the pandemic's not the only guilty party. The pace of global public debt accumulation has increased by tens of trillions of dollars over the past few years.
Vast sums are being spent to bail out ravaged economies. Hundreds of billions of euros in Germany, in India, in China, and in the United States, trillions. Governments have to borrow most of this money, but who will pay the debt back? Today's elderly or today's young? Much public debt only comes due decades later. That means today's young will carry the can in many countries. There's already a shortage of jobs and training opportunities. Higher taxes and spending cuts are quite likely in the future. So are today's millennials the main losers in the coronavirus crisis? Not necessarily. They might also stand to benefit if investment is focused on shaping the future. Education, digitalization, environmental protection. If firms are kept going through the crisis, jobs should become available again. Holders of government bonds should eventually get paid out. Today's young will inherit public debt, but some of them will also inherit government bonds. So members of the same generation will be paying each other back. If an economy grows strongly, repaying debt won't be a huge problem. Protracted crises, by contrast, would be a disaster. Inflation, bankruptcies, mass unemployment would be much worse for coming generations than inheriting a pile of public debt.
Laurie Parsons is British Academy Postdoctoral Research Fellow at Royal Holloway, University of London. What do you reckon, dangerous precedent or a sound way of funding the recovery?
Well, I think in answering that question, the first thing that we have to consider is the distinction between public debt and private debt as an individual might hold. Now, this is something that often gets conflated in public discourse, but nevertheless, it's a very important distinction to consider when we think about the recovery in debt terms from this crisis. Now, whereas an individual who takes out a loan on a credit card, for example, has fixed terms of interest and repayment, a country which takes out debt takes out loans usually in its own currency. And this has huge implications for the way in which that debt is repaid. For example, a currency which takes on debt has influence both directly via the issuing of government bonds and also indirectly via influence over the central bank, which can change interest rates and alter the supply of money. So a country which takes on debt for whatever reasons actually has quite a significant amount of control retained over the way in which they repay it. And actually, this means that it's possible to take a number of strategies to that repayment. And there are some examples quite recently. One of the positive things is that the 2008 Great Recession actually gave us some examples of better and poorer practice in that respect. Right here in the UK, for example, we're an example of not doing terribly well because of the huge emphasis on austerity, cutting public services and cutting back as much debt as possible too quickly, which is now generally thought to have impeded the recovery from that 2008 crash. So I hope that in the wake of the COVID-19 crisis, we see a different strategy more broadly accepted, and one in which we see a broader push towards growth and widely shared prosperity rather than emphasizing that debt in itself.
Is it one that's working in both developed and developing countries?
Well, the important thing to think, I think, about the difference between the global north and the global south, countries like Germany and the UK versus countries such as India, Bangladesh, Cambodia, is that in many cases those debts aren't held in their national currency. So that puts a very different spin on things, essentially. So whereas we are able to control the terms of our debt, in a country in the global south, you tend to hold debt, for example, in US dollars or widely available currencies such as pound sterling. And as a result of that, that means you don't have that control over the terms by which you repay that debt. Now, this means that you have to repay it, even if it is economically extremely damaging to do so. And so this is by no means a new issue. It's something which has been going on for a very long time, but it is likely to be accelerated in a very significant way by the debts accrued as a result of the COVID-19 crisis. Just to give you some idea of the extent to which this already goes on, just the interest payments alone from banks in New York and London have amounted to around 4.2 trillion in payments from the global south to the global north. And that is already considerably more than the total sum of development aid spending. So in many ways, we have a situation where, as a result of debts, it's the global south developing the global north rather than the other way around.
So a lot of this depends upon what the dollar's doing, what the US economy is doing. Let's look at the total public debt in the US as a percentage of gross domestic product from the global financial crisis up until this crisis. The graph gets scary. How are we going to keep up, or how is the US going to keep up?
Well, I mean, the US, as being the holders of one of the major currencies in the world, has a huge advantage in that respect. It can do a lot to influence the ways in which it repays that debt. And it's important, of course, to consider not only a single graph in which you're looking at debt, but also the wider context. If your public health response involves people staying at home, if you think that their workplaces are too dangerous and that's going to influence the spreading of the virus in places like that, then if you want them to actually stay at home, then you simply have to pay them in some respect. So, and that's what's of course been done in a different way to European countries, but through the same basic idea with the fiscal stimulus checks that have been written in the US. So as a result of those necessary provisions, which are absolutely essential if you want people to stay home, if that is your public health response, then we see these huge increases of debt. But nevertheless, you have to consider the counterfactual, whereby all of these businesses and all of those individuals were unable to have any income, or the businesses were unable to maintain any of their ongoing financial commitments. And as a result of that, when you wake up from the COVID crisis, you find yourself essentially emerging into something of an economic wasteland. So that's what all of this money has been in the service of. It's essentially an investment now in future prosperity, whereby we have the same economic tools and landscape and infrastructures to rebound to that position that we were in early 2020.
And what happens if we don't wake up from this anytime soon, if we're forced to stay home a lot longer, if another pandemic hits right after this one?
Well, I think, of course, it's a problem that we all hope not to have to face. I think, however, it's important to retain a certain degree of optimism over the future, especially in relation to our economic behaviour. Of course, the attitudes that we take into this recovery will be hugely important in allowing us to rebound strongly and return to something like the normality which we knew in early 2020. So optimism, I hope, towards the latter part of this year will be the order of the day.
Laurie Parsons, University of London. Thank you. It's that part of the show where we put your questions to our science correspondent, Derek Williams.
What are the chances on a long-haul flight of contracting COVID-19 on the plane?
I haven't been on a plane for over a year now, but I've heard from family and friends and colleagues just how unnerving flying has become, especially on long-haul flights where people can be cooped up together for upwards of 15 hours at a time. It's become an activity somewhat fraught with uncertainty since the science we have on transmission in airplanes is still pretty meager. That's because you can't run a tightly controlled experiment involving an infectious, possibly deadly pathogen on a long commercial flight. Instead, you have to see whether outbreaks might have originated on one and then extrapolate backwards, which is always a tricky business. That's what a study from New Zealand did with a flight that arrived there from Dubai in late September. Now, Passengers who fly to New Zealand at the moment have to quarantine for 2 weeks on arrival, and they're tested for the virus twice during that period. 7 out of 86 passengers from the Dubai flight tested positive during that quarantine. And because most of them had tested negative before takeoff, the scientists believed the indicators were very strong that the infection had happened in flight. They based their hypothesis on a range of data, some of it epidemiologic, but also the in-flight seating plan, when the symptoms began, and the genome sequences of viruses taken from each of the passengers. Perhaps the most compelling evidence for me was proximity, how close the people who ended up infected sat in relationship to one another on the plane. That row of 4 dots, by the way, was a family, and the scientists thought the original transmitter was one of the people represented by a blue dot. All in all, I found the study very convincing that transmission on a long-haul flight can happen, but we still don't know how rarely or how often it happens, or what factors exactly might contribute to it.